This is Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin, along with my co-host Dennis Dick. We're on the line with Jonathan Corpina. He's a senior managing partner at Meridian Equity Partners. Jonathan is joining us straight from the NYSE trading floor. Jonathan, thank you so much for coming on the show today.
Good morning. Thank you for having me.
Jonathan, I'm just going to start here, and we were just talking on the show a few minutes ago, as kind of outlining that on Friday you had a lot of buy-in balances in the individual stocks, where you saw a lot of stocks open up significantly higher, probably from where the S&P was projecting them to open up. First of all, why do you see all those buy-in balances on like a third Friday? And secondly, what did that look like from the floor?
So on Friday we kind of had a combination of two things. On the opening and the close we had an expiration for options, which does add a lot of volume back to the tape. It doesn't always going to dictate which direction, but we know there's going to be volume. And then also there was a reweighting in a couple of the sectors that was there, mostly pharmaceutical and biotech. So in those stocks there, we definitely saw some additional volume. But from the floor point of view, when we come in the morning, we start to figure out what happened overnight and what happened in other markets and how that's going to translate into today's market. We start to see the different imbalances early in the morning. Now we know those imbalances are real, but we know that they're really not going to affect the stocks way too much, just because this has been a telegraphed play as far as option expiration is concerned, and also as far as reweightings are concerned. So, weeks before a reweighting occurs, the numbers are published by the major institutions as what they believe the impact is going to be. So if one stock is going to be weighted heavier in a biotech index and one is going to be reduced, we know that monetary impact and we know that share impact based off of the price of the stock. So leading up to that particular date, you start to see additional activity in there as some of the index players and some of the program players start to hedge their positions or start to add or delete some of their positions in that stock. But on the final day, clearly there is a larger imbalance, whether it's to buy or sell. Now, on Friday, the overall sentiment to the market, yes, was to buy, and we saw that in that sector there. But I think things have been a little bit magnified lately. And there's definitely been disconnects in our markets. So magnified meaning I think our markets are moving in a way where, positive news is being viewed as very positive and negative news is very negative, whereas opposed to other times in the calendar where, you get the normal impact of a headline onto the market. And then as far as, the overall sentiment is concerned, I think bouncing off of these lows that we've seen over the last 5 or 6 weeks, the market is trending to move higher and wants to move higher. So sometimes when we do get positive news, we get a little bit extra muscle out of that.
Yeah, and I've been noticing even in the overall market the last couple of weeks, a lot of these laggards from the entire year have actually started to become some of your leaders. Obviously, we saw a lot of the oil stocks bounce back like Chevron and ConocoPhillips and ExxonMobil, but we've even saw stocks like Big Blue, IBM bouncing back here, which has just been getting sold the entire year. So money moving in or money moving into the laggards. What are your thoughts on that? Is that just going along with your thesis of maybe this market wants to move higher?
Yeah, I think it is. I mean, and if you look at oil and stocks that have been affected by oil, clearly that's been bouncing off the lows, and as we trend right around this $50 level, which I think is going to be a very important level, people are starting to feel that maybe we've seen the lowest of lows in oil, and if it can break through 50 and stay above there, I think now would be the opportunity for investors to start really looking at that sector there and seeing if they want to weight a little bit more heavier in there. And I think that's why we're seeing some movement there. Stocks like Big Blue and some of the conglomerates, yes, those guys have been bounced around pretty good and haven't seen a tremendous upside to them. And it seems like now it's somewhat of a safer haven as we head into earnings season. The bigger household conglomerate names are names that investors are looking more at.
And we've got a lot of the earnings now from the financials, and we had Goldman with a little bit of a disappointing report, Wells Fargo a little bit of a disappointment. Citigroup had a great report, and it bounced up nicely there on their earnings. And now we get Morgan Stanley disappointing here this morning. So it's kind of a mixed bag from the financials. What are your thoughts here as we're just digesting the earnings from the financials?
Yeah, it is that mixed bag that you talk about. I don't think is good for financials overall. I think we need to see some one-way directional movements that's there. When you have some of the larger companies and some of the household names start to report fragmented earnings reports, meaning some are good and some are reporting bad. It's not healthy for the overall sector. I think that sector has had some significant pressure on it for some time, and has been trying its best to kind of get out of that too big for fail mantra and trying to being able to be profitable themselves. So when we start to see some good reports and some bad reports here, I think that's just going to give investors a reason to step back out of that sector excuse me, and let it see how that's going to play out over time.
A lot of big earnings reports we're going to get this week. We're going to hear from Chipotle. We're going to hear from IBM tonight. We're going to hear on Wednesday from eBay and Coca-Cola. Thursday, we're going to get Microsoft, Amazon, Google, McDonald's. Friday, Procter & Gamble. So kind of coming into the heart of earnings season here. As a trader on the floor there, Jonathan, how do you approach these earnings stocks? Like, do you just how do you approach it when you're coming into the heart of the earnings season?
Right. So there's a couple of ways to look at this, and I think investors have to kind of take a step back and kind of look at the bigger picture of what's going on here. Yes, we get our earnings per share and our revenues, and we see where they kind of fall into place within with other names in their sector. And I think analysts have really set the bar low for a lot of these companies here, and even if they don't miss by that much, that's still perceived as good news. So I think investors have to really be careful about watching how these earnings reports are going to affect the companies. What we look for is really going to be outlook. What's the outlook moving forward? Looking for some keywords and some key terms, and also looking for exposure to oil, exposure to China. How are these companies going to continue to work in this kind of new era of oil sub 50 and exposure to different currency rates and different currency fluctuations that have affected their overall their earnings. So it's really the outlook moving forward, and not to get too far ahead of ourselves, but let's just remember, we are getting into an election year coming up in 2016, and I think we're going to start to hear and start to feel a little bit of that coming up as we get towards the end of the year. So I think this earnings season is somewhat important for an outlook of next year, and I think our next quarter is going to be even more important.
What about, Jonathan, just to ask you, what do you think about this quarter, which is typically one of your strongest quarters? And you're talking about elections next year. Do you guys do you see institutions coming in and starting to pick up stocks for next year just because of these elections? Obviously, election year next year. Plus, we're coming into potential December where you get the Santa Claus rally. Are you starting to see the buy the dippers and the institutional money coming back into this market?
Not just yet. I think we're still in a little bit of the summer slumber, where we had some pretty good volatility in our markets, and there was some pretty good pressure on our markets in August and heading into September. I don't think institutional investors are yet convinced that this market has rebounded and is going to continue to rebound. I think they're waiting to get through earnings season to see really what the overall sentiment and the feeling of the market's going to be. Yes, historically over time we do get a rally, the Santa Claus rally towards the end of the year. So even if that comes into play, it's just a question of when is the start of that rally? Did that start of that rally start already, or is that going to happen in come November? And if it happens in November, at what point will that be at? So I think we might get a little bit of a pullback in our market, and investors might have an opportunity to partake in this rally if they missed it over the last 4 weeks. But from there, I think the market will rally more towards the end of the year. So a little bit of a pullback and then move forward from there. And I think that's what institutional investors are waiting for.
Jonathan, I want to ask you just on an individual stock here, and more just, what happens on the floor when something like this happens. So I'm looking at Weight Watchers here this morning, and I'm looking at, and Oprah Winfrey has disclosed that she's buying a 10% stake in the company. Partnership, obviously, Oprah's name can really move prices. We're seeing Weight Watchers here with an incredible amount of pre-market volume here this morning, already traded 4.8 million shares. When something like this happens, is there like a crowd that goes around the floor at the Weight Watchers post before the open trying to get a feel for where this is? Is there like a lot of action on the floor before there as well around the stock?
Yes, so they will, as we get closer to the opening bell at 9:30, I'd say around 9:10, 9:15, there will start to be a lot of inquiries as to Weight Watchers. Clearly, we see where it's trading pre-market. There is a lot of volume in there. There is a lot of volatility there. But when it gets closer to the opening on the primary market, price discovery is going to be very important because some clients feel like they want to participate pre-open and some don't. And the ones that don't really want to start participating when the market opens, when that stock opens in its primary market. So we'll start about 15 minutes before the opening, really trying to discover, where the price levels are, where the real buyers and sellers come into play, and if it's going to be able to sustain this price movement after the stock opens. There's no point in opening a stock at the wrong price just to have it move quite violently after the opening. Finding that right price and finding that right that level is very important. It's something that investors want, and it's also something that the company wants, right? Companies list on the New York Stock Exchange because we do have this human interaction of price discovery and market making, where it takes out and it dampens a lot of the volatility in it. So in a stock like today, clearly I think we'll take our time on the opening to try to find those right levels.
Yeah, talk about that a little bit more, because obviously there is still that interaction on the NYSE at the open and at the close where you have that human being sitting there. How much, and this is one, thing that I think, the markets miss obviously a lot, is the human interaction there. Like even talking about the events that happened back on August 24th, when you see a stock like General Electric fall 20% in 20 seconds, and you saw a lot of ETFs fall as well. If you have that human intervention component there, though, that we had back obviously through the, forever until the last 5 or 10 years, wouldn't that help to dampen that volatility?
Absolutely, and a little common sense comes into play. And I clearly remember when we had the a technology issue with Knight, when those algos started executing when they shouldn't have been executing. It took a very short period of time for us to realize that something wasn't right, because we were seeing a pattern, not in just one stock but across many stocks, and it was the same exact pattern. So common sense really does come into play here. Computers are very reactionary. And you start to get this snowball effect where when one computer system reacts to something, the next is going to react, and little by little they start playing leapfrog with each other. With the human interaction, we're able to take a step back, slow things down a little bit, and make a common sense decision. So clearly there have been times throughout history where technology has played a major aspect and a major role in what we do and how we do it. And there's also times when human interaction is there to really fly the plane straight.
Jonathan, we've got a couple minutes left for you and a question coming out of our chat room. Of course, this time last year, everybody was talking about oil. So one of our guests wants to know, oil discussions now are focusing on oil highs, but aren't higher lows more important? Aren't new higher lows more important?
It is going to be important. Like I said earlier, this $50 a barrel level, I think is going to be important. I think that companies have had some sort of a struggle understanding the environment of oil trading below 50, and we need to find this level where everyone's going to be comfortable with that. And that being said, we're going to have to see some significant movement in the basic material sector, where some of these stocks that are clearly affected by oil movements and oil prices are going to have to come into parity with where oil has been trading. But clearly that sector, basic materials, you look back over the last 3 months, down 5% or so. That whole sector has been really, really lagging, and it's going to have to start creating some new higher stock movements here for investors to really feel confident getting back into that sector.
We've been on the line with Jonathan Corpina. He is a senior managing partner at Meridian Equity Partners. Jonathan, thank you so much for joining us on the show today. We're looking forward to having you back again soon.
Great. Thank you very much. Appreciate it.
Thanks, Jonathan.